Increase your chances of buying a home. In this video, we're going to talk about how you can increase your chances of buying a home by passing a decision in principle. An agreement in principle, also known as a decision in principle, is essentially a credit check that's done by the lender based on the information that your broker or the bank has entered into the application form. This does not constitute to a mortgage offer whatsoever.
So within an agreement in principle, the lender is effectively, first of all, doing a credit check. So just looking at your credit background and looking to see what is showing on your credit report. The other thing that the lender is also doing is they're also doing an affordability check. So they're looking at what income is coming in and also what outgoings are going out.
So for a borrower, this will tell you what you can potentially borrow and what you can potentially go to in terms of purchase price or remortgage. And it'll also give you an idea of what mortgage is available to you in terms of monthly costings, the interest rate payable and duration of the mortgage. Most estate agents will require a decision in principle before you put in an offer for a property.
It's also important to understand that an agreement in principle isn't an acceptance for your mortgage to be fully agreed. This is just the first part of the mortgage process. But essentially what this does do is it provides you with clarity in terms of what purchase price you can go to with a property.
Before starting the hunt for a home, it's always sensible to speak to a broker in order to obtain a decision in principle. You want to make sure that the house that you have actually seen that you can potentially afford to buy. So the right way around is speak to a broker first and then go house hunting.
So what information is required for an agreement in principle? The first thing that's needed is your personal details. So that's your full name, including your middle names and your date of birth. The next thing is your address history, and the lender is looking at your latest 3 years worth of address history. The next thing that the lender looks at is your income. So what is your basic annual salary? If you also get things like overtime or bonus, that can also be included potentially within a mortgage application. The next thing that the lender's looking for is what outgoings you've got. So that could be a loan, a credit card, it may be car finance, and also any other commitments that run along with that, such as childcare commitments. It's also important to remember that student loans also fall into the commitment bracket. They also need what the purchase price is of the property that you're looking for and also what deposit you're able to put down. The final thing that's required is if you've got adverse credit, a credit report is always advised. And the reason why that is because certain lenders may not accept that adverse credit. To do this, what we advise is that you get your Check My File credit report. And the reason why we advise that report is because it gives us information from the 3 main credit reference agencies when it comes to credit reporting. So that's Experian, Equifax, and TransUnion. So when approaching a broker, if you've got that credit report, they can give you the best advice.
So, how to pass an agreement in principle? It's very, very important that you approach a broker that's got a wide range of lenders to choose from, especially if there's some complexity around affordability or your credit. It gives you the best chance of getting an agreement in principle at the best rate possible for yourself as well.
When it comes to an agreement in principle, lenders apply different types of credit checks, dependent on which lender you approach. Some lenders do what's called a soft credit check. Now, a soft credit check is where the lender does a credit check on yourself, but doesn't leave a footprint on your credit report. That means it has no further bearing on your credit score going forward. However, there are also some lenders that do what's called a hard credit check. Now, a hard credit check does leave a footprint on your credit file, and that can have an impact on your overall credit rating. So it's really important that you understand before applying for an agreement in principle, what type of credit check is going to take place. So if you have multiple credit checks, that can have an overall impact on your credit rating. And by reducing your credit rating, that may have a further impact on further borrowing applications.
So the agreement in principle can vary from as long as 30 days to 90 days depending on the lender. Just also be careful because an agreement in principle doesn't actually lock in the rate at all. So what does lock in the rate is when a formal application has been submitted to the lender. As we've established, an agreement in principle will have an expiry date. So what will happen after that point is that you will potentially need to apply for another agreement in principle. That may mean that you may not get accepted if the lender has changed their policy.
So as we mentioned earlier in the video, an agreement in principle isn't a guarantee that you will get a mortgage. The lender does still need to perform their underwriting checks, which includes looking at your income, looking at your bank statements, and also doing a valuation on the property. However, an agreement in principle is possibly the biggest milestone of getting the mortgage, because passing the agreement in principle means that you've passed the credit checks with that lender. So there you go, some really helpful information around the agreement in principle.
So for more information on the house buying process, please watch this video.